Today is Tuesday, October the 29th, and we see this imbalance here in the advancers and the decliners. NASDAQ is on the declining side, and the New York Stock Exchange listed stocks are on the positive side. So that means when you have a green and a red, that you're going to see chop because market can't make up its mind. And what we saw today was we reached 1.5 on the Fibonacci of the Globex low to the Globex high. And the Globex high was achieved, let's bring that up a bit. The Globex high was achieved at 10:25 p.m. last night. And from that point on, the market just drifted overnight lower and lower. So let's pop this open a bit. We saw the Globex high, not really all that important today. Its Fibonacci certainly were, but it wasn't. But what was important was the prior day low that we came down and tested a couple of times, and we seem to be headed back down to that level again. What's important is the shape of the candle in the SPX today, and we're going to take a look at that in a second. Advancers and decliners, flat. All the markets slightly down. That means that the stock market breadth is still going to churn right around here. And, you know, we've had up days, and yet the oscillator, you know, isn't moving in the direction it should be moving in. The summation index is important. The summation index from Friday to Monday went from 2802 to 2871. So let's see what the summation index, we haven't been following that. This is something that, I've forgotten her name. Somebody on Twitter, I've forgotten her name, it'll come back to me. She follows the summation index incredibly carefully. She writes for thestreet.com. But she doesn't follow the oscillator, which takes a look at two moving averages of the summation index and subtracts the two. She just thinks the summation index is more important. So let's see what happens in the summation index tomorrow. You might want to check that later on tonight when this gets updated. So charts, the candle in the S&P is the most important. And look at how we finished on this gravestone doji here, or inverse hammer, where we finished pretty much down at the bottom of the range, almost at the bottom. So we're really heading back to test the gap, which hasn't been filled yet. The Chiku span isn't telling us anything on the daily chart, on the weekly chart either. Let's take a look at the hourly chart, because I saw something posted interestingly on the hourly, and let's just take out the pivots, take out the time frames, and take out the Ichimoku, and let's take a look at the hourly. We have this flag here, or is it yeah, it's more of a flag than a pennant, and I'm going to draw it for you. Well, I don't need to. You can see that we've got a flagpole here, this breaking the gap, and now we're running flat. So we want to see if we're going to break above or below this. Typically these will break to the upside. If it breaks to the downside, it could break hard and at least come down and fill this gap. But we still finished in we didn't finish we finished off the previous high, which was right up here, and we finished today right down there. So Caterpillar up $1.27, but whoops, I hate when that happens, but not able to fill the gap. That could very well come tomorrow, and you will see the gap act as resistance, just at the top of the gap resistance, just act as it acted as resistance here, support here, and we could see tomorrow 141.85. Now tomorrow is the Fed's announcement, and the market fully expects it to cut interest rates by another 1/4 point. Donald Trump said today that consumer sentiment was high. It's actually lower in September than it was in August. But should we expect the truth? GDX had an up day. I still believe it's going to pierce, or it's got a few more days left, 3, 4, 5 days left to pierce this thin candle. AT&T came down to test the top of the channel. Still a strong stock. It had rejection on the gap. Gaps are a spot where you can almost count on rejection. Whirlpool continues to be slightly weak. Let's take a look at volume. Volume was average. Apple's volume was a bit above average on this day where it lost 2.28%, and tomorrow is earnings. So let's keep an eye on Apple tomorrow. I got rid of my puts. They were not in any danger. Remember, they were December 20th, 210 and 215 puts, but I made $3,100 by holding on to them for as long as I did. But I wasn't going to hold on to them through earnings. I'm not sure if I'm going to play Apple at all for earnings tomorrow. I'm going to take a look at the volatility. If Apple is down tomorrow, I'm going to wait till after earnings to sell some future puts based on the direction that it takes and the amount of momentum it has after earnings. So I'm undecided. This will be the first earnings in a long time where I haven't been an active player with Apple stock or Apple options, but I will go into earnings tomorrow probably without any. Amazon still struggling. The cloud is just acting as a repellent at this point. The market knows it's going to take too much to move through this cloud, so it's sort of overlooking what Amazon is doing. Let's take a look at the volume. Really low, really low for the last 2 days. So nobody is paying any attention to Amazon, and they're looking at other stocks right now. Google did suffer a bit of down, and look at that volume here. It's a bit above average volume for 20-day moving average after yesterday's upside. So people are still looking forward to good things with Google, and its loss there loss in earnings really didn't spook anybody. But notice here that we do have a triple top, and I'm just going to draw it here for you. We got 1, 2, 3 times we've hit this value of 1290. So that's an important one to keep an eye on. That's going to be resistance, but once Google moves over that and comes down to retest it, could be a good one for the long term. Tomorrow's that Fed day, so expect choppiness in the morning.